I've been able to make a little bit less than $100,000 in the past 3 months of trading while meticulously journaling all of this data and sharing and updating my team along the way. Also, only with having a 38.2% win rate. In this video, I'm going to show you how to add and use the only 3 indicators that I've used during this entire process. And by the end of this video, you'll know how to set this up on your chart and exactly how I was able to make between $3,000 and $5,000 on average each day I was trading with these indicators. And really my goal with this video is to shift your perspective on how simple trading really can be if you know the right information. Okay, this video is not going to be that long, but I'm just going to teach you as much as I possibly can and maybe change the way you look at trading forever. So make sure that you watch this video to the end because I think it could be a game changer. All right, so if we go over to TradingView, we can get all of our indicators set up. So first I'm going to click into the indicator tab and I'm just going to type in IT Foundation. This is a custom indicator. If you can't find it here, you could also get access. Go in the description, follow me on Instagram, DM me the word tools, and it'll be in there as well. We're going to add that to our chart. And you're going to see as I toggle this on, this is going to open up this gray bar here, which is going to show me exactly where the New York Stock Exchange opens at 9:30. The next thing that I'm going to type in is the Innovatrade Pro Plus. I'm going to go ahead and add that to my chart as well. So now I basically know when the New York Open is right here. And I as well have a cloud highlight RSI showing me areas where price is overvalued and potentially undervalued. The next thing that you can star is this trend line tool here, as well as a trend-based fib extension. And then in here, this rectangle box. Then I'm also going to add this Lux Algo fair value gap, which is optional, but I like to have them on my chart, which is going to show me things that I'll explain here in a second. And this is basically the core foundation. I'm not really adding a lot of things to my chart. What I've found over years of trading is that the more simple that you can keep your charts, the easier it is for you to be able to give yourself structured entry criteria. And you're going to take a lot of the guesswork away so that you have less things to measure, which is going to add to your clarity, add to your repeatability, make it way more obvious when to take trades and when to not take trades. That's going to be one of the number one things that's going to cut into your profits and steer you off course. Okay, the simpler the better, because realistically, all we're looking to do is basically find areas in the market where we expect price to move in one direction versus the other. And what we want to do is keep our risk very, very contained. Because with my process, realistically, if I'm trading 3 days of the week and I can take between 5 and 7 trades, I'm approximately taking 20 to 25 trades every single week. All I need to do is over that duration, keep my losses contained and get approximately positive 5 risk factors. So if we're risking 1 risk factor to our stop loss, all we really need is 5 positive risk factors every single week, which is approximately 1 per day. And you're going to see with what I'm sharing with you, as well as the confluences and sort of adding the layers of filtration, we can be really selective and our goal doesn't have to be that complicated. The goal is really contain the downside, allow the winners to run and keep it super simple and just focus on this very simple goal. Okay, and you can see I'm not expecting for this to make sense to you yet, but if I can pick these really, really important areas and let the trade really run, I can make 5 to 6x what I'm putting on the table as risk each time that I'm right about my idea. Okay, so the first thing that I'm waiting for is for the New York Open to happen. This is going to happen at 9:30. This is where volatility starts to flood into the market. Okay, what I want to do is identify where a trend is developing. I want to see price either moving in a positive or negative direction and continue to follow into that direction after the 9:30 open. And I want to see that sort of continue after our 9:30 marker, either to the up direction or the down direction. It works in both directions. Okay, and what I really want to look for is areas where we're starting to go into either overvalued or undervalued territory. Now, we can't use indicators like RSIs by themselves. Okay, this isn't going to work because we have to use other smart price action and ways to read the market outside of just one independent indicator. But what this is going to do is put me in generally smart ideas where I can use other context clues to basically figure out whether it's still a smart idea. Okay, so this is sort of my first layer of filtration where I'm looking at these important levels. Okay, so once we're past that New York Open and we have a trend direction established, I want to find either an undervalued or an overvalued area to start looking for trade opportunities in. This is going to keep a lot of the nonsense out where it's just sideways chop, not ideal areas, cut out a lot of that noise and put us in generally a good area to start finding trades. Okay, and the next thing I'm looking for is sort of my next layer of filtering, which is something called a change of character. Now, to explain this simply, when we have a trend development, you'll see that we have a higher high, a higher low, higher high, higher low. For a downtrend, we have a lower low, lower high, lower low, lower high. When we finally have price that is making a low that is lower than the previous low or higher than the previous low on the downtrend, so a change in that direction, that's what we call a change of character. So it's finally showing us that instead of the trend breaking new lows, coming back up, breaking new lows, coming back up, pushing, it fails to make a new low, and then we have an area where price is able to actually push higher. This is indicating the possibility of the beginning of a new trend. So this works in both directions. So that's going to be our change of character. That's going to be sort of my next layer of confluence on my chart. And if we go back over to TradingView and we click into our indicators, I use Lux Algo's smart money concepts that I toggle on. You can see now it's showing me break of structures, which is where price is breaking higher in that trend. And then you'll see we also have change of characters where the price is breaking below it. Okay, it's not perfect, but it does allow for just an easier, simpler visual view. All right, and that's going to be my next signal. And the third thing that I'm looking for is something called a fair value gap. Now, this is reading candlesticks, okay, where we have 1, 2, 3 consecutive bullish candles where the highest wick of the first candle and the lowest wick of the third candle leave this area in between, which is what we call a fair value gap. In these zones in both direction, so for our bearish fair value gap, we have 3 bearish candles, wick here doesn't overlap. We also have our fair value gap zone in there. Okay, and you can see even without the confluences and the extra layers of filtering that I'm going to get to here in just a second, this is already putting us in really, really good general areas where we can take all of the noise once again, filter it down and find high potency areas. Something to remember in trading is there's nothing that's going to work every single time. I think people are looking for like this perfect indicator where it tells you exactly when to buy and sell. Like that doesn't exist. You still have to know how to read things and put in the reps and understand how you trade, how you react with the market. But in general, we're looking for these areas to put ourselves in a good position. You're never going to have a strategy that can outperform the market like crazy. So those small differences really, really add up over time. And if you can make sure that you're really strict with those small differences and finding these opportunities, that's how you can actually get ahead in trading. There's no magic silver bullet. Honestly, it's hard, but this is honestly how I'm approaching the markets to be able to get in really early on these trends. Okay, so you can see, once again, we have our cloud highlight RSI, the Never Trade Pro Plus highlighted. Right after that highlight, we're getting our fair value gap that price comes perfectly into and then makes a move down. We also have a change of character that happens a little bit later. Not every single chart is going to line up exactly the same, but understanding how to read these all and how they come together is important. Let's take this another example. We have cloud highlight over here. We have fair value gap, change of character setting in, price comes back into it and then flips back down. Okay, once again, undervalued area, fair value gap, change of character, fair value gap, price comes right into it and then flips. Okay, so this isn't necessarily the strategy. This is just showing you how well these areas can actually respond off of in the upside potential if we can start to use filtering processes like this on our chart. And by the way, a lot of times these are also not going to work. Okay, my win rate with this is like the high to medium 30% range. So that means that I'm losing about 65% of my trades and I'm completely wrong about these areas. What it's really about is sort of understanding how to really let these trades run. Okay, so now I want to share with you a step further of sort of my extra added layers of confluence. There's a whole bunch of other things that I'm looking at that are sort of more derived from data that we do on the private side of our trading team. These aren't necessarily rules. These are more things that I'm looking at as sort of an extra layer of confidence, what we call confluences. And my number one favorite confluence, that is basically one of the secrets of my trading, is something called the overside underside retest. And it's really simple, but it's probably one of the most effective things in trading. As we're waiting for our trend to develop, we can draw a trend level along these low points. As we're getting our change of character, or maybe even before we're getting our change of character, what I'm looking for is for price to come up after touching this trend level in closer and closer succession, breaking underneath it, and then coming back up to test the opposite side of it. So if we're looking at it as well on a downtrend, we're testing that trend level, testing it in closer and closer succession, having that change of character, breaking out of that new high, and coming back down to test that opposite side of that trend. Now, we can use a bunch of other things like on the private side of our trading team, as far as actual systems, stuff I can't necessarily get into on YouTube without being unfair. We have all of this run through data, which is showing us combinations of the best things to take based on the conditions, based on the personalized data that allow us to really get an edge. What I'm sharing with you here is like the framework of how all of this works. And my goal for you is to be able to apply all of this stuff and still have it work for you. But to keep it simple and fair for the YouTube side, these are really the golden frameworks of putting yourself into good positions to be able to leverage these big moves. And that overside underside retest is probably one of the biggest ones in conjunction with just using smart technical analysis. Okay, so I'm going to get into the entry model in a second here, but what I want to further explain is one more concept that I really love to use. And this is something that I talk about on the channel a lot, which is using Fibonacci projections. And so basically what this indicator shows us is projection levels using a golden ratio, which is the Fibonacci ratio. This is a ratio that is basically like what nature is coded in. So like facial symmetry, seashells, the way plants grow, everything has this 61.8 golden ratio in it. And for whatever reason in the markets, because we're looking at mass human psychology and the price movement of assets is sort of working in harmony with nature, we can basically look at trend developments in terms of 1, 2, 3, 4, 5 wave patterns. And all we need to do is effectively measure from the base up to that first sort of push for a pullback. And then this tool is going to allow us to see multiples of this first initial value in 160.18, 260.18, 360.18. Okay, and if we can see a harmony where we see the top of a trend at that 160.18, 260.18, or 360.18 with a 5-wave development, this can sort of further enhance our conviction. And then not only we're reading the proper break of a trend, but we also have macro confirmation that the trend has a higher probability of failing and regressing down. Okay, so this is sort of giving us a more zoomed out view of the trend. Okay, and this is something that I'm using across systems, regardless of what I'm doing. I'm always keeping in mind, do we have a completed 5-way pattern? Is the Fibonacci giving us harmony? Do we have a trend retest? Where are the fair value gaps? Where are we at with change of characters and market structure? Once we have this is basically how I'm approaching a lot of my entry models. It's basically when I have a fair value gap produced, what I'm looking for is for price to come down into the midpoint of the fair value gap, whether it's bullish or bearish. What this line is called is the consequential encroachment level. So what we want to see ideally is for price to come back down, get support off of this midpoint, and have a sharp reaction in the opposite direction. Now, if it doesn't, I'm anticipating these levels anyways because it happens so quickly. What a lot of traders do is sort of wait for a response off of that midpoint, wait for the candle to close, and then enter. I happen to anticipate these levels, but everyone can do it a little bit differently. I'm not here to say whatever. I'm just showing you what I've used to be able to get these results. And all I'm doing is positioning my risk most of the time outside of a candle that is producing the fair value gap. Now, I'm using general technical analysis to be able to put my stop loss in smart areas depending on the candle, but generally speaking, we at least want our stop loss outside of that area so that we allow for price to regress, fill that area. If we get our response, then we're basically waiting for a flip and we can start reducing risk, start trend following into our direction, which is going to reduce the exposure we have and allow the trades to sort of continue to run. So now let's take a look at a real on-chart example. I'm just going to walk through sort of how I apply all of these things together. Like I said, obviously I have to leave a few things out, but I'm going to try to share with you as much as I can. So first of all, you can see on this chart how important these fair value gap levels are. You can see price continually moving into them, moving away, moving into them, moving away, moving into them, moving away. So when price is producing these really nice trends, these are really, really critical levels to see on your chart. So first thing that I'm doing, once again, this gray box is putting us at that 930 mark. Okay, so next thing that I'm going to do is sort of draw my trend level here. Okay, I'm toggling on a proprietary indicator, which is basically going to signal to me when we have the high probability trade setups. We can play this forward. So now, once again, you can see we have our change of character. I am getting a signal because of all the other criteria is being met. Then you can see I can sort of go through, do my wave count, take my Fibonacci extension, go from that first wave back down, and you can see we had this level react really nicely off of our 361.8, well as we got support off of this 161.8 level on this point, something that I also like to look for. So we sort of have that trend breaking in a direction. We're generally in an overvalued area, and now we're starting to see weakness, testing that trend in closer and closer succession. Then we get a big candle to produce one of those fair value gaps. So you can see price comes beautifully into that area. So now we have layers of confluence to assume that this could be a weak area in the market, especially because this 930 level just opened. So now we have all of our layers of confluence. So if we wanted to place a trade here, you can see this was the area where the market started to sell off before the market makes a significant move to the downside. Okay, and I'm not cherry picking examples. What I just drew out to you, minus some of the added private confluences, is the exact trade that I took. So you can see I entered my position in here, all of my confluence added to the chart. Okay, and you can see I was basically trend following this down, was able to lock in 1300, 2300, really allowing this to breathe to the downside, right? I'm already up like 7 or 8 times what I'm risking, and then I take the trade off. Okay, so if we play this forward, we can see another trend developing right here, just sort of giving us our change of character right here, as well as a high probability area, right as we're generally leaving that sort of oversold area as well. We have 1, 2, 3, 4, 5. Okay, and you'll notice it's exactly where price comes down into to be able to once again play it in the opposite direction. Okay, and by the way, a lot of these trades are going to lose, but it's about looking to see if we can eliminate things along the way. Like for example, we have a change of character here. We have 1, 2, 3, 4, 5 break underneath that level. We may have gotten short in this area, and then it comes up through our stop loss, thinking that this would be our opposite side retest, and that's totally fine as long as we're keeping our risk contained. And that's basically what I'm doing during this process. You can see we get a change of character underneath this level. Once again, now we have change of character coming from an overvalued state, producing one of these fair value gaps for price to sort of trade back into once again before having another move to the downside. Now, as this is moving in my direction, what I'm doing is sort of reducing risk systematically along the way. I'm kind of just trend following these down. I have specific ways that I do it that I'm not going to get into this video. Okay, but you can see once again, breaks that level. I'm locking in profit along the way, letting the rest sort of run. And I'm capitalizing on these very specific moves by filtering out these ideas, which can very easily put me in positions where if I'm risking, $1,000, obviously I've built up to that. But like I said, all I really need is about 5 risk factors, in which case I can oftentimes make that in a session for the week. So I can blow up, I can have losing days. I have losing days all the time. The goal is to be able to get 5 risk factors times that 1,000 and put yourself in these ideal situations and never allow yourself to blow up. So you can see right here, once again, counted my 5 waves down to here. Price comes up, breaks out of that level. I identified this as my change of character level that price is coming into. I take an entry. Okay, then I'm able to follow this up and lock in right around 5 risk factors by holding this trade. So just to echo, consistency is way more important. If you can let your winners run, for example, Missy letting 15R run using the full entirety of these strategies, or Wace ending up 14.R on his session, like Felix with the 8.5R, which for him was $1,200 in profit. All you really have to do is put yourself in these high probability positions and test your data over time. But that's basically the 3-step main process that I've followed to be able to grow my account. I wanted to share that with you guys. If you're still here, make sure you hit the like button, subscribe if you want to know when I put other videos out. You can check out other videos here. If you want to learn more about the strategies, you can check out right here. But until next time, I will see you all in the next video.